Hello and welcome to this interesting webinar on specialized investment fund, the 5 lakh crore opportunity for MFDs. SIFs, as you know, friend, is the newly launched introduced product by SEBI. SIFs aim to bridge the gap between mutual fund and PMS and AIF. To start with, investors will have to invest 10 lakh in SIFs. SIFs will follow hedge fund strategy, which is largely long and short funds. So these are the things you must be knowing. But what you don't know is the opportunity that this asset class brings in. CAMS has recently done a survey in which it has found that SIFs could be the 5 lakh crore opportunity within 3 years. So to throw more light on this study and other findings, today we have invited Syed Hassan, Chief Program Officer, CAMS. Syed brings 3 decades of experience across multiple business functions. He holds bachelor's degree in physics, a master's in computer applications, and has completed a general management program from IIM Bangalore. So let us learn from his wisdom. Welcome to the show, Syed.
Thank you. Thanks, Nishant. Thanks for having me here. And looking forward to speaking to all of you regarding our research, our study on SIF and what we believe, is the opportunity for the industry from SIFs in the next, say, 3 to 5 years.
Yeah.
I've already spoken to 15 to 16 AMCs in detail regarding this topic. We also conducted a survey with 1,200 plus distributors and got feedback from many investors on this. Looking forward to speak about all of this in the next maybe 30 minutes or so. Yeah, thanks, Nishant. Thanks for having me.
So I'll start with a question which must be on everyone's mind today, that how will the launch of SIF change the investment landscape?
Okay, good question to begin with. So when we are talking about the investment landscape, I'll look at it from different lens. One, from the investor's lens. Second is, what does it mean for the AMCs? And third, what does it mean for our distributor friends on this call? Now, let's start with the investor standpoint. Now, before that, I want to give an analogy of the iPhone. We all know how iPhone did not just improve a phone, it redefined what we expect from a phone. I believe that this is exactly the kind of shift that SIFs are going to bring in to the MF investment space, the AIF PMS investment space in India. So this is going to be a big shift. Now, if we talk about investors, what are the opportunities or the choices the investors have now? A, the traditional mutual funds, which are safe, but sometimes index hugging, to really deliver punchy returns. Or let us take AIF PMS, which are also excellent, but not everyone can afford and commit a 50 lakh or a 1 crore to begin with. This is where SIFs come in. SIFs are carving out a very compelling middle path between MF and AIF PMS, offering very high conviction and tailored portfolios. That's exactly what SIFs do. And not just this, the advantage, the flexibility that investors have in mutual funds, SIPs, the SWPs, and the 10 lakh rupee minimum, unlike the 50 lakh or the 1 crore in the AIF PMS world, the 10 lakh rupee minimum makes it much more accessible with all the benefits that we just spoke about. That is from an investor standpoint, how the landscape is changing. For the AMCs and fund managers, look at the range of assets involved. See, it is not just stocks and bonds, but you can invest in REITs, in InvITs, in derivatives, multiple investment strategies. So as a result, the fund managers, the manufacturers get more tactical options to work with. Let us look at it from a distributor lens. More ways to align ourselves with the client goals and their wealth aspirations. Multiple ways open up with the new SIF themes. And above all, the AMCs, the investors, and the distributors, more importantly, SEBI's oversight and assurance. This ensures that this is not some risky experiment. It is transparent, very well regulated, and built with, as always, the investor safety in mind. So, Nishant, the bottom line, according to me, from an investment landscape standpoint, is now this is a significant milestone, which is marking the end of a sell and forget era. It is turning investing from very generic, okay, to more personal kind of investing. So according to me, big evolution and a big leap forward from the current investment landscape, Nishant.
A great thought, Syed, to start with. A lot of clarity you have given to me. So, Syed, my next question to you is that about the research only, because CAMS study finds that the demand for SIF will be very high among investors. In fact, your study says that it would reach 5 lakh crore within 3 years. So, tell us more about these findings.
Yeah, thank you. Thanks for asking a very pertinent question, okay, regarding our study, because that's a bedrock of all the discussions that we are going to have today. We did a very detailed study, Nishant, using CAMS analytics to size the AUM opportunity for the industry. So what is it going to be in the next 3 years? What is going to be in the next 5 years from the current investors? When we talk about current investors, it's not just about the MF, the AIF, and PMS, but we did a deep study on the current investors in direct equities, margin trading,
Mm.
F&O,
Okay.
derivatives, real estate. We covered all of that. And the outcomes, okay, I was talking about the discussions I've had with 15 or 16 AMCs. They
Mm.
proved to be really insightful and useful to the AMCs for planning their SAF strategy. And
Mm.
I'm glad that we have this opportunity now to share it with our distributor partners on this call because it shows the size of the real opportunity here. So, what
Mm.
does it show when I'm talking about the study that we did? In summary, it is showing two clear areas. There is a huge pool of investors in direct equity, margin
Mm.
trading,
Mm.
F&O, and real estate who would
Mm.
like professional management and liquidity. Okay, for specific reasons, we will talk about it in detail. And this segment alone, the non-MF and the non-AIF PMS segment alone has a potential to bring in 1.5 to 2 lakh crore of additional AUM in the industry in the next 3 years.
Okay.
Coming to MF and AIF PMS, there are premium customers in the MF segment, okay, who are doing, for example, 10 lakh plus investments in lump sum, okay,
Mm.
putting 10 lakh plus checks on the table, or
Mm.
investors who have 50 lakh plus investments in single fund houses, not just across 50 lakh investments in a single fund house. If we take investors in this category, the premium investors in the MF segment,
Mm.
it is coming up to 3 to 4 lakh crore of potential AUM addition. So if
Got
you
it.
add this A and B that I spoke about, these two numbers add up to close to 5 lakh crore, the number we spoke just now, through
Mm.
SIF, okay, at an industry level in the next 3 years. And when I'm
Mm.
saying this, it is not just theoretical, based on a research and based on, say, some assumptions, etc. We already see real strong data patterns to support this in the current investment. I'll share some details. For example,
Mm.
HNIs we know are already contributing to more than one third of the MF AUM. I think the number is
Mm.
some 34%.
Mm.
Millennials, okay, actively seeking thematic funds,
Mm.
sectoral bets, okay, and 70% of the Gen Z MF investments, they're already in equity. And if you
Mm.
take CAT3 funds in AIF, which are very similar to SIFs,
Mm.
CAT3s have grown 65% year on year.
Mm.
So the real takeaway from this is 5 lakh crore that we are talking about that SIFs are going to bring in the next 3 years for the industry. It is not just a forecast. Okay, for everyone on this call, according to me, it's a big giant green light for
Mm.
anyone, okay, looking to grow their client base or wallet share or share of business. A big giant green light and a big opportunity is what how I'm looking at SIFs. Nishan.
So, one follow-up question, Sayed. Uh, does it also mean that some money will flow from mutual fund to SIFs?
Yeah, see what happens is, and at this point, okay, we believe that a little bit of this cannibalization can happen, okay, for premium investors in MF, but we believe that the most impacted one could be the Cat3 AFs, Nishant. Cat3 and maybe 5 to 10% of the current MF investors may move their money into SIFs as per our projections and as per our calculations.
Got it. Got it. So you spoke about direct equity customers, margin traders, derivative investors, real estate. But how can MFDs convert these clients to SIFs? How can they do it?
Interesting point. Okay, so I spoke about our study, which covered not just MF and PMS. We also looked at the other investors, the adjacencies in our world, okay, capital markets world. And I also went to understand the real estate part. Okay, in fact, I wanted to do a commodity and forex trading. Okay, so I limited myself to real estate because it also has got return in it. But let me talk about three sharp data points that we looked at. Direct equity investors. See, let's be honest. Many of the direct equity investors that we have think that they are stock picking geniuses like Warren Buffett. Okay, till one bad day comes and one bad bet wipes out the entire gains. Okay, so many have gone through, say, this cycle and this challenge. When compared to that, for the same direct equity investors, if we speak to them on SIFs, it gives a much better conversation starter. Okay, so it says, Mr. Direct Equity Investor, you can still have with SIFs a concentrated and a high alpha portfolio, but a one which is managed by professionals, okay, with real research. That's the difference between what SIFs can give vis-a-vis direct equities. And if you're able to position that well, it'll be a great idea to convert at least 5 to 10% of direct equity investors who are already doing this 10 lakh kind of numbers. We realize that in our study, there is a potential of 3 to 4 crore direct equity investors now who are handling 10 lakhs and above in terms of their investments. Those are the kind of investors who can move to SIFs. That is one, Nishant. Number two, if we take the F&O, derivative traders, etc., we are aware of the SEBI study which came up, okay, I think last year, which spoke about 92% of the people losing money now, okay, in F&Os and derivatives and taking these short-term bets, etc. So for F&O traders, SIFs gives this opportunity to move from speculation to a very clear strategy. So instead of putting this punting in options, they can get a very well-researched and very actively managed, like what we spoke about from the AMC standpoint, and very high conviction SIF investing, okay, in derivatives, backed by all research and backed by very, very thorough people in the AMCs. That is for the F&O traders. Real estate investors, we all know that in India, you need at least some 50 lakh to invest in real estate, and sometimes turns out very illiquid. So SIFs still can tap into themes like REITs and infrastructure investments and make it a very liquid and a very well regulated and handle it in a much diversified way. So I would say for these investors in F&Os or direct equity or real estate, it's like how Uber did. Okay, the famous example of Uber replacing taxis is applicable here too. Okay, it has given people a smarter and a stress-free alternative. So the opportunity for these investors, I would say from the F&O frustrations that people have gone through or the real estate stagnations, SIFs are going to be a very smart exit way for the clients. And I would call it a strategy over stress, okay, for these investors with SIFs coming in as saviors for them.
Okay. So the product can make in distributors uber rich as well.
Yeah, of course. Yeah, the intent is ensure that the entire ecosystem benefits from it.
Yes, yes. So Sayed, who would be the ideal client segment for SIFs according to you?
Yeah, good question. So in this, Nishant, I've done a long stint with levers, okay, and half of my working life has gone there. So I would like to look at a way where, say, Unilever used to look at this, a consumer brand segment market. It is differentiated into, I think it was called the Many Indias strategy, okay, where we used to classify premium customers into premium and mass premium segments. Okay, and I think the same context is applicable for SIFs too. Within the premium segment are the HNIs. Okay, HNIs are looking for please give me PMS-like customization, but don't strain me with a 50 lakh minimum. Okay, is what the HNIs want and are saying. In our study that we did with the distributor survey that we did, like 1,238 distributors were covered, including AF-PMS distributors. When we asked them, who do you think are the first ones who could possibly contribute and move to SIF, their input was also very similar. HNIs, okay, are going to be the premium segment. Number two is young professionals and millennials. I would classify them as the mass premium segment. And they are not going to be satisfied with a typical mutual fund with over diversified 70 stocks invested in a fund, etc. They look for specific themes that they believe in, the young generation. They'll talk about EVs, semiconductors. Okay, you should talk to them about tech, and ESG kind of themes are those which attract this population. And I've mentioned this twice now, the ex-F&O traders who have learned hard lessons and looking for something structured and with better risk management. So I would say that these could be the three segments: HNIs, young professionals and millennials, and ex-F&O traders. And the real power, okay, of SIF comes here, whether it's HNI who's chasing alpha or a millennial looking for those mega trends. There's a strategy that SIFs are making it tailor-made for each of these categories and coming up with the right solutions. So we should wait for the AMCs to launch their products and talk about it shortly, when you will realize what I'm talking about in terms of these strategies and matching the mega trends, Nishant.
Okay. And you already mentioned that I mean SIF can become 5 lakh crore industry in 3 years. But you also mentioned to me that it could become 10 lakh crore by 2030. So can you elaborate more about this?
Yeah, of course. So I'll stick to the 5 lakh crore in 3 years for now, and we extrapolated it and we said that by 2030 the potential could be 10 lakh crore. And interestingly, Nishant, when say we arrived at after this real deep dive and deep research, okay, done over a 3 months period across all industries, I also spoke to a few other people on when I heard from them, okay, on these YouTube videos, etc. They were also giving a projection of 10 lakh crore on those sessions on SIFs. So I asked them, how did you do it? How is everyone talking about 10 lakh crore in 2030 kind of a number? So one person told me, hey, very simple, Hassan. There are 1 lakh people who are doing derivative trading, or 1 crore people who are doing derivative trading. And if each person comes and invests in SIF, 1 crore into 10 lakh becomes 10 lakh crore in 5 years. I found that to be too simplistic, but yeah, I'll go with that. And the second detailed study, I would say, was done by one of the AMCs in terms of what is the potential, where they stratified based on demographics, okay, HNI, ultra HNI, that kind of population. And based on that demographic study, interestingly, they had also arrived at that number of 10 lakh crore. So our deep research that we did, or whatever came from these, say, from the air kind of numbers, or other kinds of approaches that were taken, everyone is talking about a 10 lakh crore number, which is good for the industry. Having said that, these numbers, the 5 lakh crore in 3 years or the 10 lakh crore in 5 years, it is not just marketing optimism. It's grounded in real data backed by the deep research done by CAMS. Let me share some data points. In the world of mutual funds, we have seen that, or we see that there are 25 lakh investors who are holding 10 lakh or more investments in mutual funds, 25 lakhs. Now, within this population, there are some 3.5 lakh investors who have investments of more than 50 lakhs. When I'm saying more than 50 lakhs, in individual fund houses, in a single fund house, there are people who are having more than 50 lakhs. And if I just take the last 3 years, because SIFs will need a minimum 10 lakh, right? So it's not good enough to have 50 lakh in a single fund house or 10 lakh investment across all MFs. So we looked at who are those people who could afford, okay, 10 lakh checks, lump sum checks in the MF world. There are 10 lakh such people who have put in 10 lakh rupee plus checks in MFs in the last 3 years. So this is a massive, okay, I would say ready for upgrade premium HNI segment. And this is one big segment, okay, which talks about, say, how the upgrades can happen to SIFs. And if you look at the investors currently, they are very well informed. Okay, I would say much, much more informed than ever. For example, post-COVID, they have seen those sectoral cycles very, very closely. Okay, they've seen pharma, okay, going in 2020 and the PSU revivals, which happened in 2023. So the investors are now ready to bet on these cycles. But one difference is between past and now, they want to do it very intelligently this time. And thankfully, SEBI's framework, okay, gives a very regulated and a very transparent way to tap to this demand. So for the distributor friends on this call, it will be a very good idea to get ready, okay, to lead clients to this next level that we are talking about, beyond MF, beyond AF, beyond PMS, etc., because the market is very ripe, okay, and the audience is ready. I gave examples of 10 lakh people who have put in 10 lakh plus checks on the table, or Cat 3 is going 65% year on year, or 3.5 lakh people having 50 lakh investments in mutual funds. All these data points are pointing to the audience, the investors being ready. And I also spoke about the AMCs with whom we are engaged. Okay, the SIF products are getting built for this audience and going to be launched. We will start hearing more about this in terms of 4 to 6 weeks, in terms of the real products coming out in the market.
Okay.
Yeah.
So, how does the current landscape of mutual funds support SIFs?
Okay. Now, if you look at the traditional mutual funds, okay, I believe that there is a over diversification problem. There are some 50 stocks, 70 stocks in one portfolio. And to me, it looks like throwing spaghetti at the wall. And the way SIFs fix this problem is with 10, maybe 20, max 30 very focused and high conviction bets. Okay, and this drastically improves the chances of real alpha. It is not putting some money in some 70 stocks and hoping that majority of those will find its way and we are safe, etc. SIF goes beyond that. Very focused, high conviction bets. Now, I would also look at the clients. Okay, also understand focused investing these days. Okay, they know how to allocate money in different buckets. This goes to passive, this goes to active kind of buckets. And this purely a big thanks to passive strategies like ETFs, that they are very clear in their mind on focused investing. And PMS AUM, if you look at, okay, it has exceeded 10 lakh crore. Okay, and it shows that clients are keen about customization, okay, not a vanilla product. And I spoke about investors, 3.5 lakh investors who have put in 50 lakh plus investment within a single fund house. Within those 3.5 lakh investors, 68% of those 3.5 lakh have put that 50 lakh investment only in one or two funds, which also shows that the investors are looking for specialization within the MF world too. So with this growing need, okay, of specialization, the key point is SIFs do not replace mutual funds. Okay, but it is moving the investing pattern from broad strokes, okay, currently to very bold themes, is how I would look at it, Nishant.
Okay. So, Sayed, we all know that mutual fund companies have expertise in long only thing, right? They buy and hold generally. They do not have expertise in shorting the stocks. So, can you take us through the current readiness of the industry to launch and manage SIS?
Yeah. So, yeah, this is a question that many people ask me, okay, when, say, we talk about SIFs. 2 to 3 months before, what I was hearing was, oh, we are all in a wait and watch kind of a mode. We are finding the right people, and we want to look at how the market is developing. Why should I go first? Let somebody go and develop the market, then I will come in, etc. Was the kind of view which was coming even 3 months before. Now, I'm speaking to at least, say, 3 AMCs on a weekly basis regarding SIFs on different stages, either talking about the opportunities, talking about the execution next steps, or now how do we put the dates and move forward with the implementation. So this shows that, Nishan, the concern on whether they'll have the fund managers, they'll have the long and short ready people, etc. This answers, okay, in terms of the pace at which the MF AMCs are moving. And 1/3 of the mutual fund AMCs in the country have already filed their application or in the process of filing for their SIF approvals and in the last stages. And when I'm talking about these 1/3, these are not just niche SIF players. It's a mix of large AMCs, medium-sized AMCs, and growing AMCs, etc., with solid strategies lined up. That's from the AMC standpoint. If we look at CAMS, okay, we were ready with the technology as of in May. We knew that this is coming. We wanted to be ready proactively. So from a CAMS standpoint, the systems which are required for this to support the minimum 10 lakh purchase redemptions, or the specialized reporting which is required for this, or the focus analytics. Okay, there is some of this you are seeing or hearing in this call enabled through AI. And priority service lines, we have established separate service lines for HNI clients in SIFs. So from the CAMS standpoint, we are ready. And the important part, okay, when we talk about market readiness, beyond the AMCs, beyond CAMS, from the distribution standpoint, the NISM 13 certification, okay, which again, sometime before we heard that very daunting, very tough, etc. But I think our distributors are picking up that challenge and eagerly clearing it. And this number that I had is 400 distributors have cleared NISM already.
Great.
And very clearly, the ecosystem is now investing in upskilling because the opportunity is very clear. So the short answer, Nishant, okay, for your question on the industry readiness, straddling from the technology readiness, okay, and to the talent readiness that you spoke about on fund managers, etc. The industry, I would say, is not getting ready for SIFs. It is already ready and good to go, is the way I would sum it up.
Great analogy, Syed. So talking about the distributors, how will SIFs change the life of MFDs and their clients?
Okay. So I would look at an analogy of travel agents, how travel agents evolved. So they used to sell only tickets, okay, or generic packages. Today, travel agents are designing and selling bespoke journeys. This is the kind of shift that SIFs will demand from the distributor community. So it will be moving from selling plain vanilla mutual funds to becoming wealth architects. It's a true wealth architects for the clients. So advantage, look at the advantage, look at the business case for distributors. See, it's going to be a 10 lakh minimum, which means bigger ticket sizes if you're able to sell well, better revenue potential, and very deep client relationships because the money is big. That's from a distributor standpoint. If we take the clients, okay, it is going to be better risk adjusted returns versus some random stock picking. Okay, we spoke about the F&O and the direct equity investors. Vis-a-vis that, okay, better risk adjusted returns. And I would say, yeah, real alpha potential, okay, through very concentrated and a very well researched portfolios. Okay, so there is a good opportunity for a real alpha in this and good risk adjusted returns. So for the distributors, how life is changing was the question that you are asking. I would say that this is going to be the time, okay, to evolve from being a product seller to becoming a trusted advisor. Many of our distributors already are. We are seeing that distributors, wherever it is a regular plan, okay, the drops in SIP or the drops in the better retentions, etc. We see when it is with a regular plan. Having said that, now it is the time to become a more trusted advisor who's offering differentiated and high value solutions. I would say that this is going to be a winning formula, especially in a premium SIF space.
Okay, great. Sayed, apart from exams, what kind of preparation does an MFD need to sell SIFs?
Yeah. So the NISM exam, we all know it is tough. Okay, and clearing that exam is going to be just the step one. Okay, so there is work to be done beyond that. If you look at work to be done beyond that, I was talking about knowledge, I was talking about being a trusted advisor, I was talking about being a wealth architect, like upgrading to be a wealth architect and all of that. If you have to be in that space and if you have to really succeed, then the distributors need to know the sectors where SIFs are putting their investment strategies on. For example, distributors should be able to talk about the tech trends, the banking trends, the trends happening on what is happening on EVs, what's happening in the semiconductor world, what is India's semiconductor mission, are we setting up any fabrication units, okay, what happens to the GPU, what happens to the power, etc. It will be very important for distributors to start understanding this lingo on what's happening behind the screen in all of these areas, so that we can explain very credibly to the clients. Many investors don't understand. When I'm saying this, it's not about asking the distributors to upgrade. The reason for suggestion or the guidance for distributors to know all of this is because many investors don't understand these sectoral risks or thematic risks or opportunities. So it will be a good idea for distributors to understand this well and explain with simple examples. For example, saying that you see a pharma fund, okay, is like betting on healthcare growth, which is obvious in the country. Okay, with medical tourism and India growing as a good destination for hospitalization, etc. And it is also important, okay, to explain to investors about derivative strategies. And Nishant, you spoke about long short, okay, strategies used in long short, arbitrage funds, etc., which investors will find it very difficult to understand initially. Okay, so it will be important for the distributors, the current MF distributors, to understand in detail about these strategies and explain them in very simple terms to the investors. I would say that is number one. Number two, need to coach the investors through the experience that is already happening in the MF world, which is enabling better retention, etc. Having said that, SIFs, we know they are going to be high conviction and thematic bets, but they are going to come with volatility. So the need for staying invested, at least for 5 or more years, is going to be essential. For hand holding, need for providing that guidance, okay, to ensure that investors are staying and not trying to time the market. That becomes very important. Third part is portfolio construction. This is going to be a very different skill now. And when we are doing this portfolio construction, Nishant, you touched about that topic and asking if there is money which is going to go away from MFs. We need to make sure that the investors understand, okay, especially the HNIs, understand that SIFs need to complement and not cannibalize the existing MF holdings. These are two different worlds. So we should ensure that as distributors, this is happening. So in summary, three things. Knowledge part, okay, developing and building the knowledge on the areas that we spoke about, the sectors, the themes, the strategies. The second is coaching, which the distributors always do. Okay, they need to coach and ensure that the experience is made useful for the clients to stay, and ensure the portfolio construction part and explaining. So webinars, social media, workshops, where required AI, Gen AI, etc., adopting all of this for better communication is going to be the new reality for distributors. Because, see, the truth now in the SIF world, the changing world is knowledge is going to be the new alpha. And when we are talking about success, okay, it is moving from like what I was mentioning at the beginning, selling products, okay, to truly advising clients, okay, with the knowledge I spoke about, the insights and the confidence, providing the confidence to the clients about it. That's how I would look at it, Nishant, as the work, okay, or the next steps for the distributors beyond passing the NISM 13 exam, which is a prerequisite for selling SIFs.
Lot of food for thought, Sayed, on this. One more question. So what are the three things that MFDs should know about SIFs before recommending it?
Wow. I always like the number three from Steve Jobs, okay, who says that don't give 4 points, don't give 5 points, give 3 points. Okay, so if I can think through on what can be three specific ones
Mm.
before recommending SIFs. Okay, I think I touched upon this earlier.
Mm.
One, see, SIFs are not for everyone. It's not for every client. It is for clients, okay, ideal for clients who are having a higher risk appetite,
Mm.
at least say 10 lakh plus liquidity, and
Mm.
a slightly longer horizon of 5+ years. I have
Mm.
to say that is number one. Being very clear that this is who's a client that we need to talk to and sell SIFs. Second point to know before we recommend SIFs is these are thematic and cyclical. And we should advise clients, please don't time the market. Okay, and we are there as advisors, as distributors, okay, to help you stay the course. Please stay there, okay, and you will get there. And the third point, okay, before selling SIFs is to advise clients that the alpha potential is real, but
Mm.
the risk is also real. Okay, there is risk. Okay, and this requires very active monitoring and very active advice to reach to the destination of wealth creation. So
Mm.
the mindset shift becomes very important, that this is not a shortcut to make some quick money, okay, through punting or this. So these SIFs are not a shortcut. SIFs are sophisticated strategies. And if we use them correctly, SIFs can transform both for the client, okay, the client's wealth journey, the client's goals, client's aspirations. Okay, it can take care of that and also transform the way the distributors practice is happening currently. That's how I would look at it. So this answers your top
Yes.
three that you are looking for on what we should bear in mind before recommending SIFs. In summary, not for everyone. Okay, so choose the right clients. Second is thematic and cyclical. So stay there, help clients stay the course. Number three, the potential is real and so is the risk. So active monitoring and active advice is how I would put it, Nisha.
Okay, before I head towards asking audience question, so we'll take some audience question. But I would like to know what is your final thought on SIFs?
Beyond the data points and beyond what we spoke just now, if you want me to leave the audience with some final thoughts on this, which all of us can remember, if the traditional mutual funds are like a buffet, broad, predictable, we know what is lined up, very comforting. Oh, yeah, I have everything what I want.
Mm.
SIFs are the a la carte chef's special menu. So let's be honest, the buffet is great, okay, till it lasts. But
Mm.
now the investors are looking for very curated, like what we spoke about on the HNIs and millennials, etc. Investors want very curated, very concentrated, not a 70 stock MF. Okay, I want something which is high conviction and concentrated and focused. So curated, concentrated, and custom built experiences is what investors are looking for. That's the promise of SIFs. Okay, and for everyone who recognizes this early enough,
Mm.
this is going to be a next big opportunity. And I would summarize it as this is not just the future of investing for the distributors on the call. This is also going to be the future of differentiated advice. Okay, and the need for us to step up and get there is how I would look at as a final thought and a summary of this, Nishan.
Great, great thought, Sayed. So we do not have so much of time, but we would try to take few questions. So
Yeah.
one question has come from Gautam Rana. So he is saying that if the what could be the return potential of SIFs, and if it is in the line with MF, then why should I sell SIFs?
Yeah. So we spoke about SIFs being in competition with AIF PMS. And when we say that AIF PMS, the assumption here is the sophisticated strategies that we spoke about, okay, and the flexibility available with the fund managers to invest beyond, say, stocks and bonds gives the opportunity or indicates that there is a better opportunity than what is possible through MFs. Having said that, okay, I would still say that this is not for all. This is for those who are looking for good returns and also have the risk appetite and can also stay. So if these combinations or the validations hold good, then please expect a better alpha and a better return than a index hugging mutual fund is how I would like to put it.
So Sayed, you mentioned during our conversation that some money would move from PMS AIF to mutual fund. Why do you think that people from AIF would come to SIS? What is your view?
Yeah. See, one, I would say that, okay, I can go back to the study that we did, where I gave a number in between, Nishant, when I spoke, that potentially 5% of the MF investors who are doing these lump sums of greater than 10 lakhs, I think that there is a potential of 5% of these people moving and investing now in SIFs because they know mutual fund, they know that it is well regulated, safe, etc. And they also know that SIFs are also equally well regulated by SEBI. And I'm not saying that the entire world will move, but potentially a 5% conservatively, I think it will move looking for better returns and better alphas. And I would say that, again, CAT 3, look at the tax difference between CAT 3 and this. So I'm expecting, according to me, is large percentage of new CAT 3 inflows could move to SIFs. Okay, and maybe a 20 to 30% of current, say, CAT 3 investors migrating is how I would see it. And from the PMS world, like what I was mentioning about mutual funds, I gave a number of 5%. Here also in the PMS space, maybe 2 to 5% of the current PMS clients, I'm expecting them to shift largely because of what we just spoke in terms of well-regulated, well-researched, well-covered, and the SEBI guarantee on safety for the investors, okay, the backing of all of that brings in the confidence that at least a 5%, 2%, etc. will move, but it is not going to bank on the 5% and the 2%. It is going to be the new set of investors who could also come in from the F&Os and the derivatives and the direct equities and the real estate space, which gives us the confidence that it's going to be a potential of 5 lakh crore in the next 3 years, Nishant. That's how I would put it.
Got it. So, Sayed, a few of our audience have already cleared the NISM 13 examination, but they want to know what's next. How can they register with AMFI? How can CAMS help them get the license? And what could be the registration fee for that?
Yeah. So now there is, apart from the NISM basic exam, the 5 exam for distributorship, and then the fees payable based on whether the distributor is an individual distributor, a corporate distributor, or an UIN who's working with the distributor, etc. Now, the basics for selling SIF is going to be this plus the NISM 13 clearance plus an additional fee which is payable for SIF registrations with AMFI. So the details are available, okay, in the AMFI website, etc. The details are available, and we'll also share, okay, in the CAMS distributor WhatsApp community. We will share the details on what are the next steps which are required. We'll share it with the community, Nishant. It should be available there. And if you are not already part of the CAMS WhatsApp distributor community, okay, please feel free to get there. The QR codes, etc., are available on the CAMS website. We'll publish it in the next 1 or 2 days on the next which are required, which will make it very simple to register and enroll.
Got it. So, one distributor named Jayesh Patil, he wants to understand that how many folios are there having more than 10 lakh investment in equity and debt, especially in small cap credit risk and sectoral funds.
Now, say I don't have a split at the level of small cap and sectoral, etc. But if you're, so what is the amount that Mr. Patil is looking for?
10 lakh.
10 lakh. Okay. See, there are 25 lakh plus investors, okay, who have more than 10 lakh of investment in a single fund house. Okay, statistic number 1, which could be useful for Mr. Patil's understanding. Then there are 5 lakh plus investors who have put in more than 10 lakh plus lump sum checks in the last 2 years. And if we take it to last 3 years, there are some close to 10 lakh plus investors who have put 10 lakh plus checks on the table. So does that help? These are the 2 data points that we have at this point, which is shareable. Okay, so 25 lakhs with 10 lakh of investments in single fund houses and 5 lakh plus investors in the last, say, 2 years, and stretching it to even the current year, we are seeing 10 lakh plus investors who have invested 10 lakh plus rupees lump sums in individual fund houses.
Okay, so we'll take one last question. What would be the taxation of SIFs?
Now, it will be in line with what is there for the mutual fund space. That will be the difference in taxation. And we are talking about a short term of 20 and a long term of 12.5 in the SIF space.
Okay. So, all right, we have come to an end to this interesting session. Thank you so much, Syed, for your valuable time and inputs.
Yeah, thank you. Thank you, Nishant, for having me here. And thanks for all those who joined. Okay, and I hope, okay, the insights and the data points that we shared based on the CAMS research and study has been useful. And we are always available for anything that you specifically need. Okay, we are always available. And thanks for joining today.
And
Thank you.
finally, thank each one of you for being such a wonderful audience. Have a great day at work, guys, and have a lovely weekend. Thank you so much.